Good evening everyone and welcome to Admiral Markets webinar. Today is 19th of January 2015 and we will talk about 5 different pair setups today and basically what happened last week with Swissy. For all of you who didn't watch live interview with Dale Pinkert, you can watch it. It was retweeted a couple of times, so you can see my opinion of Swissy trades. And as always, before I begin, I will read the standard risk disclaimer. Then I will proceed with setups which happened last week. So first of all, let's see a risk disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with the Forex market. By accepting the risk disclaimer, you are also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the extra suggestion for the trade. These are not MK's opinions, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only. This webinar is for informational and educational purposes only. So, with having said that, quick introduction to all newcomers and traders who are actually trading these setups. Usually you need to give price a breather, so that means that we enter within 5 to 10 pips of the predicted level, and of course definitely if it's an agreement with your system. Rauno Schmeiman is saying, I cannot see the presentation. Check your video settings. I don't know. Guys, yeah, it's okay now. Great. Okay. So we don't need to confirm. You usually enter within 5 to 10 pips of the predicted level if it's in agreement with your system. Or you can make pending orders. So it depends on you. Always respect your stop loss. Now, after this, what happened with Swissy, this is of utmost importance. I really don't know if any one of you traded Swissy without stop loss, and I'm not sure how your brokers behaved concerning stop loss. I basically had only 20 pip of a stop loss for Euro Swissy trade, and there is suggestion which I pasted and posted last week. It was Euro Swissy stop loss 90.95. So I was really tight with stop loss, and I really was paying attention because I knew that if 2000 breaks eventually, that will be a huge move. So that's why I put my stop loss only 5 pips below the level. Fortunately enough, I'm very happy that I got only 20 pips stop loss, and I know that many traders didn't use stop loss at all, or some traders used, I don't know, percentage stop, and many traders lost their accounts. Really, SMB lost completely, in my eyes, lost its credibility, and I'm really glad that now we can trade Swissy, but I won't touch it. Really, I don't respect their banker, I don't respect their currency anymore. So there are 23 pairs more to trade, 20 pairs. So actually, until this whole thing settles down and until something happens for the better according to Swissy, trading Swissy, I won't make any analysis and I won't trade it, really. I just do not want anyone, be it one of the biggest central bank, to interfere with my trading style. Not just with me. I'm not so important in this world, but it all has about mortgages. People are paying their mortgages, house, especially in Swissy. Many traders and big brokers also are on the edge of default. Fortunately enough, Admiral Markets had good risk management, and basically it was only a limited hit to Admiral Markets, and that is a good thing. But this is not a good thing to Forex industry to let these things happen. I know that there can be manipulations. I know that there can be some volatility jumps and spikes, but SMB and what they did, they really deserve all the worst that can happen to them also. All of those people who basically were following that directive to drop the floor without any announcement. And I just cannot stress out what I heard 3 days ago, 3 days, and 3 days before that happened. Thomas Jordan, president of Swiss National Bank, said that they will definitely defend the floor with every possible means. And what happened? They just ran away. They knew what was going to happen. They ran away from defending the floor. They closed all of their longs, and that was a huge spike to the downside. But again, as I say, one more reason, guys, to trade with the stop loss. One more reason to trade with low risk. That is why I'm saying try to use 0.5 risk on the pair you trade. So you effectively are limited your risk to a whole lot. So if you trade basically with 0.5 risk per trade, then you can risk 2-3% per day. So it's actually 3-4 consecutive losses. In contrary to many opinions who are telling you to risk, I don't know, 3-4-5% of your account on a single trade. I'm not saying that can be profitable, but one thing in Forex market is for certain. If you want to make 50% per year, you need to be prepared for a drawdown of 50%. So it goes like that, definitely, okay? So we will talk a little bit more about Swissy, and let's now get back to the main subject of the webinar. We take only one position, okay? Position trades are trend trades, okay? I call position trades trend trades. Alternative trades are definitely counter trend trades. Sometimes I can put a sentence alternative position trades. That means that we can go in a second trade which is alternative, but it goes in trend direction. In all other way, alternative trades are deemed counter trend trades. I will occasionally give you breakout trades and scalping trades, as I was giving you these last 2 weeks after the new year. Usage of trailing stop is highly recommended. So guys, use your trailing stop, okay? Use your trailing stop. It's very important. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. This setup which I'm giving you today on 5 different pairs is valid for today and tomorrow. I will not trade on Wednesday simply because we will have ECB announcement. Then again, NFP is on Friday, but the main event is definitely ECB on Wednesday, right? So I won't trade. I definitely won't trade. No, it's 22nd. Yeah, it's 22nd. It's on Thursday or on Wednesday. But definitely, guys, these setups do not trade on Wednesday. So only for today and tomorrow, because market will be definitely a bit volatile. Let me just check. Okay, let me check with the calendar. Yeah, I hope that you took this ODN trade. It was pretty much very good to trade. A close above 97.35, targets 98.80, because we are having low volatile daily as the US is on holiday. It's good. We got 30 pips after the close, about 97.35, so it might go up. We will see. Let's check the calendar. It's on. Let's see. It's the end is Friday. Okay. Okay, this is Friday 23rd, okay? 23rd, Wednesday. Yeah. On Wednesday, we will have GBP news. Yeah, I know that Wednesday is important for something. GBP news on Wednesday. So this setup in my opinion, is valid for today, tomorrow. I'm not saying it couldn't be valid also on Wednesday. You will see the setup for GBP, but please be cautious. Yeah, and definitely ECB press conference will happen, of course, on Thursday, January 22nd. Yeah, January 22nd. So pay attention to it. Scalp trades should be done at or very close to important support resistance levels. So when I give you scalp trades, they are pretty much should be done, I know, at important level or maybe close 1 or 2 pip to close to that important level. Scalp trades are calculated by historical levels plus Camarilla. You can add these levels to your system and see how they behave. Pay attention to my Twitter updates because occasionally I update my trades on Twitter and Admiral Markets blog, Forex Factory, Spiders Den, and sometimes when I make a setup and subsequently I can maybe tell you, okay, now it's good time to close or trail a stop, but put your stop to break even after you made some profits. And it's good to pay attention to Twitter updates. And the term which I use with these slides is pips pool. That means the maximum available number of pips you could have got on recap entries. So, last session recap. Euro dollar plus 20 or plus 45. It depends where you enter the trade. GBP dollar was definitely a winner. It gave us 150 pips. Aussie was good for, 60 pips. Aussie was good for 60 pips. Euro Swissy, well, I got minus 20. Now, it depends from broker to broker. I'm not sure if any one of you traded Euro Swissy. I did, and I showed that yesterday on Twitter. I gave you my account statement for Euro Swissy, that particular trade, so you could see that Admiral Markets gave me a proper stop loss. It was only 2 pip slippage, so I made my stop loss on 95 and I got slipped for only 2 pips, but it doesn't matter, it's okay. And total pips pool 240, so definitely trade for the week was GBP dollar. And now let's see what happened actually that last day, okay. Euro dollar. So this is the time of webinar. So this vertical red line is always representing the time of the webinar. I got into a buy at 70.80. Stop loss was 70.40. Trail stop price. I always recommend trailing the stop after 50 or 20 pips. What happened? The price was hit here. It was next day, and no, this was not. This was a scalp trade. This is where the price was hit. And subsequently it went 21 pip in a profit, 22, and then it dropped to our scalp level 70.55, but look, scalp level was good for 45 pips. So that is the maximum number of pips. So even though if you made 20 pips, it's still okay. Euro dollar, well, it was good to buy at 70.55 definitely these days. So you could have scalped 3-4 times of this level. Even from 70.40 you could have made some nice profits here. But definitely the trade which was really the winner was GBP dollar. So position buy around 51.00. These are pasted trades from my slides. So exactly the same trades which you can read here were basically given you on the last webinar. Okay. So it was position buy around 51 or alternative buy position 51.20. Either way, it was very profitable. Either way, 51.20 or 51.00, look, it jumped even more than 150 pips. But it was definitely good, very, very good a zone to take long positions. So GBP was the winner for the last week. Australian dollar was also very, very good. We got into position around 81.35, stop loss 81.00, target was 82.15, and the next target was 82.60. What happened? This was the webinar, and the price got in here, and it was good, 65 pips. Then it dropped again, and again it was bought for 50-60 pips. So 3-4 times you look at this, but of course we take the first hit, and it was actually very, very good to trade. So Australia and New Zealand was also good. Euros we see was the worst that could have happened in the latest Forex history. I particularly do not remember any day like this, but fortunately enough, again, I was stopped out for 20 pips only, but I will elaborate a little bit later about Euros. We see it was a stop loss trade. Dollar yen, yeah, dollar yen didn't qualify. That was the case with dollar yen. It definitely didn't qualify. Why? Yeah, I see. You see, when I tell you sell, it means that definitely the pair is in some sort of downtrend. Sometimes my levels do not get hit. And that happened with dollar yen. I was waiting the price at this level, but it came very close, exactly very close, not very close. But if it went 35 more pips, I would short it. But it was 45 pips short of my entry, and I say it wasn't qualified, okay? So that was for the last week. Now let's see today's and tomorrow's setups. For me, euro dollar is in downtrend, although it made some retracement. Looking to sell around 1630 to 40, stop loss 1665. Target is what I was speaking on live trading room with Dale Pinkert, 1375. Yet again, guys, I advise cautious. Do not take a big risk. This is small risk trade. If euro is bound to go down, it will go down, and I still think it will hit 1375. But I'm not sure when. I still have, this is setup, this is the only setup I can see at the moment. Okay, euro dollar, and my stop loss is 1665. So add your spread to your stop loss, and I don't know, what can I say? I just think that it should hit, maybe it won't hit it now, but later, but still this is now from risk to reward ratio the best possible trade I could have analyzed. I will show you why. Euro dollar, this is effectively some sort of V-shaped reversal. But look at the logic of this V-shaped reversal. First of all, we have important level here. Now, second of all, we will use Fibonacci. What do you see? The gap between 1650 and 1681 is big. So unless this level is broken and 65 is not hit, it should go down. Now, also there is some logic in that. Today is dollar holiday, USA holiday. It's Martin Luther's day. And what can happen is basically that this price was shooted up because maybe dollar traders, Wall Street will short it tomorrow, okay? So that usually happens when we have strong news or some impending news such as this one. So it might be that they spike up the price just to give us a better sell. From risk to reward perspective, this is level to sell. It's 61.80 here, close to 61.80. Stop loss should be 60.65 for spread. And I'm aiming for monthly target, which is, you already know that if you listen to the interview, this is the level 1375. Okay. Now it doesn't matter. 1375 is the level because it was definitely, this was definitely historical point. It could jump from there, but I think the next target should be that. As I say, this is monthly chart, but 1 hour chart. This is some sort of potential downside from these levels there. So from risk to reward perspective, definitely this is the trade. Now if it hits stop loss, it wouldn't be big because it's only 35 pips, 40 pips. Risk is 0.5 per this trade. So trail the stop after you are in the profit. If you are in the profit, and I will not be giving you scalping levels just because we have USA bank holiday. So please do not take any, I don't know, scalps. Scalps can be dangerous now, or you can end up with 2, 3, 5 pip profits. I just do not work that way. To see scalping levels, we need volatility. So I need to calculate I have a personal developed method where I calculate the levels with historical prices, with Camarilla, and because it's USA bank holiday, we don't have volatility, so no scalping levels for today. These levels are just simply, maybe they cannot be defended. So, you know, scalp trades are very low risk trades, and you have tight stop loss. So, you know, now at this point, those levels are not so hard defended, and price can hit stop loss. That is the only reason why I'm not giving you scalping levels today. Next week, it will be. GBP dollar, again, it's an uptrend intraday, but longer time frame suggests sell. So I will be waiting for 51.90. I again still think that GBP could be sold. This is bearish pattern. This is a form of Buddha tree top pattern. It looks similar to head and shoulders. So this could be a right shoulder. This is the head, triple top at the head almost, and it's failed W pattern here. This is also a form of a shoulder, and this is the indication for Buddha tree top. So Buddha tree top, and it looks, as I say, similar to head and shoulders. So my idea is to enter around this confluence zone here, because this is where we have confluence. Sellers here, sellers here. Look, sellers, 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 sellers here. And yeah, it could have been sold from this level, but if it jumps here again, I will be shorting it, putting my stop loss just above this high here where I put Fibonacci, and that is the setup for GBP. Position seller out 51.90, doesn't need to be precise level. 52.40 is stop loss, 50.90 is target, but as I say, try to get in if price gives you an entry around 51.90. Australian dollar is ranging. We have a triangle on Australian dollar. This is the triangle. So yeah, Ravi saying that's also Camarilla H3. Yes, Ravi. So Camarilla, yeah, H3 is level to go short. Only way when we go long on Camarilla H3 is when that level is already broken and it's not resistance, it turned to be support. So once resistance becomes support, we can go basically long, okay? Australian dollar is trapped into some sort of triangle, but it also can look like a sort of a flag. Still, to me, it looks like a triangle, and you can see how it behaves. It's in range. This is the range inside it. So what I see is trade the range. Buy around 81.85, 81.60 is your stop loss. Target is 82.15. Sell 82.25, or you can sell 15. It's still 10 pip buffer. Stop loss is 85.50, target is 81.85. So this is the range on Aussie. I just, you see, we cannot be sure where it will go, but I would prefer to see a long, because if this is some sort of a flag, it can go down, that this is a flagpole, so it can go down, reject from this level, and proceed further. So we take only one of these levels, but you see, this is a range. So we need to pay attention to these. Please, if you want to trade Aussie, open your 1 hour and place these two lines, and you will see that this is inside the triangle. There is a range inside the triangle, okay? 81.85, 81.60, 82.15, 82.25 or 15, 85.50, 81.85 is the target for the sell. I'm a little bit more inclined to Aussie longs, okay? New Zealand dollar, it's definitely an uptrend. 77.60, 77.20 stop loss, 78.70 is a target. 77.60 is I shouldn't have, it doesn't matter. 70, okay, let's see, New Zealand dollar. So now it's very close. You can enter here if you want, but your stop loss is 77.20. Target is 78.70, okay? So it's bit, look at this. It's a bit close. 77.60, 70. This is level to probably you can go long here, but 77.20 is target. We have 1, 2, 3, 4, 5 pin bars, which are basically rejecting the price. So why is my logic to put 77.20? Because 77.20 is below 78.6, is below the most prominent pin, and the price is in uptrend. So that is my logic, okay? When you see pins to the upside, like these ones here, that means that there are buyers here, and that pair is really being bought into. So what you do is you use your logic and your price action knowledge analysis. You can also put your trend line in here, okay? And look, 1 pin, 2, 3, 4, 5, 6 pins, all above 78.6. So I think that the price should not go to stop loss. From these levels here, you can go up and see what will happen. Dollar yen is making cup and handle pattern. It's intraday uptrend. So we can have two possibilities. We are close to a possible sell alternative counter trend trade, and we are a little bit far away from positional buy trend. My personal opinion maybe is now sell trade, even though it's in intraday uptrend, but this cup and candle can be also traded like that. So position buy around 116.90, 116.65 is stop loss, 117.70, 117.70 is the target. Cup and handle here, okay, cup and handle. This is cup and handle pattern, and definitely the pair is, it looks like an intraday uptrend, but it's very close to shorting zone, and for me sell around 17.70 is pretty much okay, with stop loss only 30 pips. So this is the level to go short, stop loss 30 pips, and it should go down. For a buy trade, I would wait for 16.90, 16.90 for a buy trade. Exactly at 50% Fibonacci. Then we have strong buyers here. So if that happens, we will be looking to buy. 65 is your stop loss, and target, target is 177. Yeah, 1665 is your stop loss. That's correct. 16, so basically we wait for this level, and 65 is your stop loss. I don't think it should go this far, but I would place 5 pips below, so 60 would be my stop loss. I see that something is strange, so it would be 60 exactly. Stop loss for this one. Okay, this is dollar yen trade. Now let's talk a little bit more about Euro Swissy. Now I know it's already gone, but I will say a few words about dollar Swissy trades, and I will show you what they did to dollar Swissy traders. Basically, those dollar Swissy traders lost 3 years of gain. 3 years of gain in a single hour, right? In a single hour, they lost. Just pay attention to dollar Swissy. I will just let me find it. Look at the monthly chart of dollar Swissy, okay? And look at this. So this was the year of 2011. This was the year of 2013. So effectively, they raised 3 years of profit in a single day. Now, why did it happen? Purely technically speaking, not using fundamental views, definitely you already know that when you have a strong price movement and when you are long into a trade, as soon as you click close your trade, that means that the market will give you a sell trade. So I have mentioned that many times before. Each close of the sell position, it's automatic buy into the market. Each close of the buy position, in this case Swiss National Bank, is automatic sell into the market. They had huge orders. You just cannot imagine how huge those orders were. And they were measuring into billions and billions of euros. And basically, they were long. All these days they were long. They were waiting for euro to drop on 20, they were long. 21, they were long. 22, they were long. They were buying euros effectively, and Swiss National Bank was the biggest buyer of euros in recent years, just to basically protect their floor on euro Swissy, because Swissy is pegged currency. If you don't know what pegged means, please use your vocabulary. I know how it's translated in our language, but in your language it's definitely different. So it's a pegged. When you have two different pairs tied to each other, we say they are pegged. And basically they were using euros to support Swissy, and you know that Swissy house market and most of the house market in Europe depends on Swissy. So basically it was, for me, in my opinion, it was definitely not possible for SNB to hold a peg if ECB announced quantitative easing. So the president of Swiss National Bank, Jordan, knew it was going to happen because he has strong ties with European Central Bank. For all of you who don't know what quantitative easing is, it's I can say a form of monetary policy where a central bank will create electronically new money to buy some financial assets, for example, government bonds. So knowing that, Jordan definitely was very afraid that speculators, which are speculating on euro Swissy floor break, those speculators themselves would break the floor. So he just ran away. Okay, he just ran away, leaving the floor unprotected, closing all big longs, which were accumulated into billions of euros, and that was the reason for a huge spike. Now, one more reason for all of you to trade with low risk. Now, some people and some traders who are also mentors and who are also, I can say, professionals in their job, they were laughing at me, symbolically laughing, not literally laughing, but we had a deep debate and at one seminar here in Belgrade when a group of students asked their professor, what do you think, how big the risk should be per trade? And he easily said it should be 5%, 3 or 5% per trade. And I told them, okay, my opinion is if you go with 0.5% per trade and your aim is in between 3 and 10% per month, you are good. And now that professor, which he was not laughing, but you know, he was a bit skeptical about that, because that is a company which does business also in Forex market, and I just wanted to help some of the traders who are basically entering into world of Forex trading. And I work for Admiral Markets, so you know, of course I would like them to come here and trade with us, but you know, it was a different kind of seminar, and that was a different company because there were some 5 different companies on that seminar, and each of those representatives had their own views. And I'm so glad that I'm not, you know, cocky or something, but this is now a good showcase to see how you should use low risk. And now, on other end, I'm glad that my teaching is proving fruitful in the worst market conditions. So if you use 0.5 risk, you should be safe, always, always and always. Even though if those spikes happen, your investment is safe. Use low risk and trade safely. Okay, also, my opinion is that dollar Swissy now can be manipulated because ECB will continue to devaluate the currency. Money would have been flowing into Swissy, okay? And now higher Swissy does not help the exporters, while lower euro definitely is helping. So definitely what my opinion is, they can manipulate dollar Swiss currency because they turn now to buying dollar Swiss on its lows. This low here was created by SMB, and this low here was also bought from SMB. So now they are basically trying to use dollars to devaluate Swissy currency. Okay, as you already know, as dollar Swissy, when dollar is going up, Swissy is going down. So this is what I had to say about also this. This was a quick summary of that SMB move, but you can always protect yourself by using lower risk as suggested, because guys, if you use 5 different trades, if you use 0.5 per each trade, that will be your 2.5 risk for all of those trades. Even though if all of these trades basically hit stop loss, you will only lose 2%. But if you gain, you can gain more than these 2%. Okay? So, as you know, I am a big supportive for low risk trades, and generally that is my opinion how Forex should be traded. Okay, I will roll on through these slides again, so if you want to snapshot it, go on. Yeah, Euro GBP short 86.80. I will take a look. Yeah, why not? Yeah, for me it's low risk trade again. I already took it, Kalyan. I took it, so 77.15. Yeah, I have that setup, but I didn't want to. Basically, I have that same setup here on my platform, and it was valid, but I didn't put it here just because some traders are not so experienced to trade Euro GBP. But I have the same short here. I will explain why I did that short. I still think that Euro should go down, and GBP has the room to go up. So yeah, I'm in this short, but this wasn't the trade for session recap. But yeah, definitely it's worth shorting it, because if you look 4-hour time frame and you put Fibonacci from this top to this top, you can see basically it's very close to the confluence point which resides here, and it's also confluence point with H4 long. So we have triple confluence. Previous breakout, retest, close. We have previous sellers here. We have H4, which now is resistance, and it's very close to 61.8. So definitely, Kalyan, I am in this trade, although, you know, it's not my stop loss. I will tell you where my stop loss is, and I will show you that. Okay. It's a little bit conservative. Yeah, 77.15 is good, and I agree with you, but my stop is here, 77.10. It's 5 pips below your level, 77.10. Because still, if it hits the level, it can go up. So and you look at this, it's 77.8. I added the spread, so 77.10. But 77.15 is also okay for Euro GBP trade. You're welcome, Kalyan. So you can take snapshot of these charts, and let's see what will happen. Goran is asking, do you still think that Euro Yen will go down from 16 January? It's kind of difficult to say now. I know that now it's level to go short, right, Euro Yen? But the thing is, yeah, you can try to go. It's not a part of this webinar, but you can try to go short on Euro Yen. So let's see where Euro Yen is. Yeah, you can try to go short, and you can try to exploit that movement. Please use low risk. It still can be good, okay? So use low risk, please. Okay? You can see how this 4-hour candle is making a shooting star. Okay? Shooting star here. Okay? So GBP, snapshot it, euro dollar, GBP, or print screen it, whatever, Australian dollar, New Zealand dollar, and definitely dollar yen. So guys, if you have any more questions to ask me, go ahead, don't be shy. You can ask me whatever you wish. So if you want me to analyze or take a look at other pair, do not hesitate to ask me. Daniel is asking, what do you think about Euro AUD? Yeah, Euro AUD, Daniel, is definitely sell. So let's see, Euro dollar is definitely in sell mode. I wanted to short it today, and it's definitely sell, but still the only thing which bothers me is this top here. It broke a little bit of this, but yeah, it's sell. It's a sell definitely on Euro AUD, because if I want to take a short, and I'm already in Euro dollar trade, I would also take Euro AUD because those pairs are correlated, and I think that Aussie can go up, dragging Euro AUD down. So it's kind of correlated with Euro dollar, and yeah, it's good for short. Definitely is. Daniel, my opinion is that Euro AUD is good, but pay attention to stop loss and do not use a big risk. And this is the level to go short. I will use also Fibonacci. Let's zoom into 1 hour. It's easier. And let's use this previous top here, Fibonacci retracement here to the bottom. Look at this. Triple confluence here, triple the confluence here. Definitely it's bound to go down in my opinion, but it's my opinion here. As I say, we have a trend line, we have H4 level which is rejecting the price. We also have a 38.2 Fibonacci. So yeah, Daniel, you're right about Euro AUD. Even though if this does not work, it's technically valid, and I support it fully, okay? Fully. Lo is saying, thanks for setups and fundamental insights according to Swissity. Thanks for MA2 being fair company taking about stop loss on Swissy. Yeah, really, I was really happy when I saw it hit my stop loss, and yeah, Admiral Markets did a good job there, and well, and I definitely appreciate it. Goran, did you get my email from today? Camarilla, Goran, I hope I did. Yeah, I saw your email, but I didn't have the time to respond. I will definitely respond during this day, so do not worry about it. Yeah, do not worry, Goran. Thank you for your kind email. Thank you for good words and for support. So yeah, I will definitely respond. I always respond to every single email, and sometimes it takes the time, but guys, if I miss from time to time someone's email, do not judge me, because you know I really have a lot of work to do and need to do analysis webinars and so on. So please do not judge me if I miss from time to time. And now Lucas is asking, how come that your Camarilla levels are? Yeah, these are custom. These are custom made Camarilla indicator, which I got from one trader, which actually is a big supporter of my work, and he made this Camarilla indicator especially for me, and I'm using it now. It really is good, and yeah, it's those levels are short, and it's like I like how it looks, and it gives me ATR price range. So it's a bit different, but well, you know, it's different, but still the levels are same. So still the levels are same. So if you have older indicators, do not worry about it. Aussie, New Zealand. So about emails, do not worry, I will respond to each email. If you want some indicators, whatever, you just write me and I will help you definitely. So just send me an email and I will send you indicators. Euro, AUD, yeah, Lucas, don't worry. Australian, New Zealand. Australian, New Zealand. Here. Well, Aussie, New Zealand, my opinion. Look, it still looks rangy, but it looks like a running flat top triangle here. We don't need these two. It looks like some sort of running flat top. So I would, Aussie, New Zealand, I would wait for a breakout. And because this is ascending trend line here, effectively we would like this level to break, because ascending triangle is bullish in its nature. So if this level breaks, I would go for a breakout pullback continuation or breakout pullback trade for Aussie New Zealand. So breakout pullback trade on Aussie New Zealand. Stefan, yeah. So flat top ascending triangle, price looks and it making higher lows, and it wants to make a higher high, but it will make higher high only if this level is broken. So for this level to break, we need a breakout of this level, retest towards H3, which is the first target, and H4 confluence with previous tops, which is this target here. Okay, so Australian dollar, New Zealand, a possible breakout for you, Stefan, possible breakout trade. Okay. If you have other questions, guys, whatever pair you want. I still do not make gold analysis, but I promised you before New Year that I will be making gold analysis. So soon I will dare also into that kind of market, and I will make gold analysis for you. But mostly I will be definitely concentrating on giving you setups like this, with of course scalping levels. And I told you why we didn't have scalping levels today, because we have a dollar holiday. And definitely pay attention also to possible gold analysis and scalping levels for you to make nice pips. Flip the chart, you not say flip your slides again. Yeah, definitely euro dollar. So snapshot the chart, euro dollar, GBP dollar, Australian dollar, New Zealand dollar, dollar yen, and euro dollar is kind of playing out now. So if we get a jump, some of you who are late, you can re-enter, but we will see. GBP yen and dollar CAD. I had questions. Yeah, let's see dollar CAD, then I will move to GBP yen. Let's see GBP yen first, because the question is whether it has the same triangle. Yeah, it looks like it has, but it's not. Yeah, definitely the same triangle. Definitely the same triangle on GBP yen. Yeah, this is so-called flat top ascending triangle. Flat top ascending triangle is bullish in its nature, and you should wait for a breakout retest. Definitely the same triangle with GBP yen. Jocelyn Tsai is asking for GBP yen triangle. Does it look the same as Australia, New Zealand? Yes. The question: dollar CAD, then CAD yen. Dollar CAD. This looks like potential head and shoulders, dollar CAD. Dollar CAD, left shoulder head, right shoulder. So this looks like a potential short trade to me. We also have inner trend line here. Inner trend line is in a confluence with pivot point and H3. Okay, pivot point and H3, confluence point with inner trend line. So this looks like it should go down. Okay, when this L3 level is broken, which is very close to a neckline, this should pull the price to the downside. Okay, did you get it? So at this point, dollar CAD looks bearish. Left head, right shoulder, inner trend line, confluence point. This is neckline. Neckline is in confluence with L3. Once L3 is broken, it should go to L4 and L5. So that is what I see on dollar CAD this quickly. Okay, so dollar CAD is clear now. Okay, we can move on to the next pair, which is CAD yen. Arne, you are welcome. CAD yen. Let's see CAD yen, CAD yen, CAD yen. CAD yen here, CAD yen. CAD yen looks like it's forming cup and shoulders. This is effectively bullish pattern. So this looks like potential bullish setup. This bullish setup is already playing out because you had retracement from this point to this point. You had retracement here at this point, which I will mark with vertical line. This candle is your rejection candle. This candle is a bullish hammer. It's close to L3 pivot point, handle. This is handle. So this is cup and handle pattern. This is handle. So lower part of the candle, confluence point with L3 pivot point, and 38.2 Fibonacci retracement. So this is bullish setup. This bullish setup started to play from this pattern on. It looks to target H3, but the only possible way it will target H3 is once this level is broken. So pay attention to this triple top. Once this triple top is broken, it should aim for H3, which is basically in a confluence with previous top. Okay? I hope that it helped you on CAD yen. If it didn't help you, if I speak too quickly, I can repeat it again. Caesar is saying thank you, so everything is clear. So guys, you see now how I do these setups and how I trade. I trade my Camarilla MACD, and thanks to Admiral Markets, there is a possibility for you to take all of these free setups each Monday. And each Monday we have free session recaps which use all of my Camarilla MACD knowledge inside it. So effectively these free setups and setups which I post every single day on Admiral Markets blog, Forex Factory, those are all Camarilla MACD setups. And now that is why I can analyze the charts pretty quickly, because this is the method which I use, and this method is using chart patterns, Camarilla levels, various trend lines, Fibonacci retracements, and it's a blend of a perfect price action with only one indicator, which is MACD. So thank you guys for attending the webinar. I hope it helped you. These are the trades which also I take. Sometimes I am a little bit early out of the trades because I use trailing stop, but as always, use it to your advantage. Thank you guys for listening to me. I will be with you very, very soon. And don't worry about Thursday. Just do not trade on Thursday. But my opinion is that we will not have many Swiss trading opportunities, because Swiss is now is not interesting to trade, but we will be concentrating more on different other pairs. So thank you, and I will talk with you soon. Cheers and trade safe.